Hello and welcome to the new studio slash office. I've moved to Austin, Texas. Things are a little different, but with the channel, things are going to remain the same. With the occupation, things are going to remain the same. The room is going to get some art and be adjusted as time goes on, but everything else is going to stay the same, just in a new location and ready to move in, as I already have. So let's talk about energy and what's been happening, because stocks have been down in the energy sector for the last week or so, and this is quite uncomfortable for a lot of us and unfortunate for all of us, because we had been expecting finally the recovery is going to occur. For a brief few days, it looked like finally the bottom is in. Energy stocks can't sell off anymore, and they haven't hit new lows, but it's just kind of been this low energy, pettering little type move going on here that none of us like to see. I think there's a lot going on here that's very appealing. And I think since we last got on camera last Wednesday, fundamentals have actually developed positively for energy, in addition to what was already the case in the fundamentals. Not just the fundamentals, but the technicals are also backing up some assumptions we've been having and maybe indicating where stocks are going to go next, because we're seeing some unusual behavior in the price of the stocks. But first, let's get to the fundamentals, and then we'll get to the technical stuff at the end. Fundamentals. We already know the fundamental case. The price per barrel is ridiculously high, around $70 a barrel, 68 and change right now. It was 69 plus this morning and yesterday. That's a very high price per barrel. When energy stocks peaked June 4th, oil services, that was also the beginning of the first delta curve in the Western world. The UK delta curve began right about June 4th. That was the peak of OAH, Schlumberger. Exxon kind of held in there a little bit longer. Chevron held in a little bit longer, saw significantly less of a drawdown, but a significantly lower move to the upside. So June 4th is kind of the day where the selling began in energy stocks. Before that, everything was normal and good. After that, we had this Delta variant fear. The price of oil is right back where it was, but the stocks are not necessarily the price of oil. They're a little more volatile than the price of oil because they factor in expectations, things of what's future energy demand going to look like, not just what's the energy supply demand dynamic right now based on supply and demand. So Delta comes in, freaks everyone out, energy stocks fall, price per barrel is just very volatile. We got OPEC, we do have some slowing of Delta. Bottom line is, Delta has rolled over in the UK and appears to be very clearly now rolling over in the United States. We're going to take that off the table. OIH, that first stock we mentioned, ETF, was $240 on June 4th when the price per barrel was around 69. Today, price per barrel is around 69. OIH is at 185. That implies a $55 move. It's really more like 60 because I believe it was at 240 just to get back to those levels. That's a pretty big move. That's a 30% plus move. And on June 4th, I was under the impression OIH had more to catch up given where the price per barrel was. Now, that price per barrel, one can be like, well, stocks are, they obviously have other forces involved. They're not the price per barrel. And people are concerned about the long-term demand of energy, especially with the EV revolution clearly on the horizon. And I believe EVs are likely the future, and we'll have a part in that future. I do think the major energy companies are all hedged and prepared for that possibility, and all have plans to go carbon neutral, but it doesn't matter. They're not trading like they're tech companies, they're trading like they're energy companies. However, there have been developments since the last Wednesday video, which are not being modeled by the people who do the modeling. We don't do a lot of modeling in these videos, or it's not my style of investing to model. I do basic modeling. I don't get this much into the weeds, but a lot of professional Wall Street does get into the weeds like this. What has happened? The chip shortage is posing serious problems to new car manufacturing. The CEOs of BMW and Volkswagen, and previously Ford, Jaguar Land Rover, basically every other company, and Elon Musk have said now that the chip shortage essentially has no end in sight, but they believe it will be in the next 6 to 12 months. That is absurdly long. In the meantime, most car lots are empty, and EV plans, because of this, are being delayed. So any modeling for when the EV revolution is going to occur, and we're just going to toss our, gasoline cars into the crushing machine, has now been postponed a year. Now, I know that doesn't sound too great. A year, what kind of time is that? Well, it has a domino effect. You got Tesla pushing back the Roadster and the Cybertruck. And let me just clarify the bias here. I, since November of last year, have had a $100 deposit on a Cybertruck. I just bought a new Range Rover, not new, old, new to me. I was considering buying a Tesla Model 3. I went with that. It's a year that has to be modeled by these Wall Street people. And a lot of their pricing of these stocks currently prices them at a 6-year lifespan on average in the energy industry. So if we are postponing the advent of the crushing of all internal combustion cars and all essentially other means of traditional non-renewable fossil fuel energy consumption, that's a nearly 20% increase right there off an extension of the chip shortage. That's not being factored in. No one's talking about that. It exists though. So gives me more reason to just stick in the trade and in the investment. It is an investment. It's not a trade. The fundamentals are very much in our favor for energy stocks. You throw in the dividends in there. You just got a very good earnings machine, well-priced stock being completely mispriced because of long-term concerns that have been accounted for a very long time now by the companies, particularly ExxonMobil, Schlumberger, British Petroleum, and Chevron. As far as I'm aware, I'm sure there's other ones out there. I've actually heard a couple CEOs say some other things. Don't follow those stocks. So that is the fundamental picture. That is the new piece, the chip shortage, that I believe should aid energy companies. Now, from a technical perspective, a lot of these majors are looking a little scary. But a lot of the more volatile, vulnerable plays aren't looking as scary. And I'm not even saying the majors are looking scary. I'm chilling, okay? I'm chilling. Bring it on. I do think the local low has been hit, and we should be turning around any moment now. And I'll get into that in a second. I'm just going to name drop a couple stocks. If you look at something like Energy Transfer, ET, or LPI, those charts still look very good. And at some point we will get video editing, and we will put those charts here. ET and LPI, I think, are very indicative of what a good chart looks like. And a turnaround has already begun. They look like they have certainly bottomed. Obviously, markets are uncertain, but it looks like they're certain that the bottom is in. Technicals. What's this weird technical thing that's indicating to me that we might be at a bottom or close to it? It's very rare that you see a stock having the kind of technical behavior that, for example, Exxon or Schlumberger is having right now. Also, be very volatile in the first 30 minutes, virtually, I believe. You can fact check me in the comments. But every day since last Monday has been up and down within the first 30 minutes. Both up and down. Not opening low. They open low, come back high, go low, recover, or they open high and go low. There's a buyer there, and there's a lack of a seller there. That's why these stocks are, I assume, do you assume, are opening up or going up. This kind of volatility, I'm not a volatility guy. I don't like to play volatility. It's not my game. As far as I'm aware, and everyone has said, you lose money doing that. So we don't do that. But when you see volatility, it indicates something. I see a lot of fundamental appeals behind energy stocks, and I see a lot of chatter about why you can't invest in energy because they're all dying, they're going away, and just sell it at all costs. And I think it's the best investment case in the market right now. So when I see volatility like that, very specific, first 30 minutes every single day for the last 6 trading sessions, 5, 6, I think something's up. Something is up, I believe. So we will see what happens. And until next time, peace out.